So you've signed up for the ROI Goalstetter tool and you think there's something to it, right? Let's jump in and see what it's all about. This video will help you get up and running with your first email marketing model and on the road to more email return on investment in just a couple of minutes. Please know that if you have any questions at all, we'll jump on the phone with you for just a few minutes and get you going or get you unstuck. The numbers you generate from the ROI Goalstetter tool will help you justify your email marketing program or the value of any improvements you're considering. Let's get going. The objective of this first video is to show you how to set up a base case scenario for your email ROI model. The first thing you need to do is go to fulcrumtech.net/email-ROI. Alternatively, you can go to our website, FulcrumTech.net, and click on the email ROI link up at the top. Then, all you have to do is click the login. You'll be asked for your username and password. Once you've entered them, you'll get to this page. At this point, you have three choices. If you've already created a model, you can jump right into it by skipping the wizard. If this is your first login, you can use the wizard to guide you through each step of setting up your model. Finally, if you prefer to skip the wizard, you can use the sample model we've set up for you to play with. We're going to use the wizard to create our first model. In each field, we've provided you with a tooltip to help you understand what you need to enter. Notice the tooltip that pops up as soon as I click in the field. If you're not sure what to enter, just enter a number in the range we suggest. You can always go back and edit it later. The first field asks you how big your list is. For this, you want to enter the number of names on the list you regularly email to. If you have a list of 300,000 and you haven't emailed to half of them for a long time, then you should only enter 150,000 as your list size. For this example, we're going to enter 150,000. Next is a question you might not be sure how to answer, so I'll explain it. Typically, a portion of your email recipients lose interest in your communications over time. If they haven't opened or clicked in 3 or 6 months, we may classify them as inactive. Inactive users are unlikely to ever open or click ever again. Many email marketers continue to email these people anyway. Enter the inactive portion of your list for this field. In our case, we're going to assume that's about 20% of our list. Next, we need to know at approximately what rate you're adding email subscribers to your list each month. If you're not sure, you can quickly calculate it by estimating how many new emails you add to your list each month divided by your total list size. In this example, we add about 1,500 people every month. If we divide that by 1,500, our list size, we get 1%. So let's enter that. The next question can also be a bit tricky to answer. A few moments ago, we reviewed how to determine the inactive portion of your list. This question is asking how quickly you think the active portion of your list is becoming inactive. Here's how you can think about it. If we assume that someone is inactive if he or she hasn't opened or clicked in 6 months, how many more people will we have next month that fit that same description? In our example, we said 20% of our list is inactive. That leaves 80% of our list active, or 80% of 150,000, which is 120,000. We know from our experience with many clients that about 25% of a list becomes inactive over a 12-month period. For our example, we're going to assume that's about 2,400 people on our active list becoming inactive each month. So, 2,400 divided by 120,000, our active list size, is 2%. So let's enter 2%. If you're still not sure what to enter for your program, you might be conservative and enter a number between 1 and 2%. While we're on the subject, here's an important power user tip. The model assumes that you are not removing inactives from your list. If you are doing regular re-engagement campaigns and you're regularly removing older, unengaged, inactive users about at the same rate that people are becoming inactive, you should enter 0% for your inactive growth rate. Let's hit the next button. We're a quarter way down your model. It's easy sailing from here. Step 2 is all about the forces that are causing reductions in your list size. In the ROI Goalstetter tool, we call this small group of items list attrition. First, how many unsubscribes do you have each month? These are the people who have clicked on your unsubscribe link in your emails or have written requesting to be removed from your list. We're looking for the number of people who unsubscribe each month, not a percentage. You should be able to look this up easily from your campaign reports from your email service provider. In our example, we're going to assume it's 1,000 people a month. Next are bounces. Again, we're looking for the number of people who bounce each month, not the percentage. These are the people who have a hard bounce, not the out of the office or other type of soft bounces. Again, you should be able to look at your campaign reports from just about any email service provider to determine how many email addresses bounce each month across all campaigns related to the list we're analyzing. In this example, we're going to enter 500 people. Finally, enter the number of spam complaints you receive on a monthly basis. Some email service providers include this number in the number of unsubscribes. If that's the case with yours, just enter 0. If your email service provider tracks spam complaints separately and doesn't include them in the number of reporting for unsubscribes, then I'd enter the appropriate number here. For this example, however, we're just going to enter 0. Let's hit the next button. Step 3 focuses on costs. It's important to enter costs so we can calculate your return on investment. Even if you're not sure of some of the numbers in this section, you can just enter something within reason. Again, you can always go back and edit it later. The goal is to get you to some point of having a model you can play with. Then, you can easily see the impact of changing your assumptions. The first item is the fixed costs of each mailing. Typically, this is where you would enter the appropriate labor costs of creating an email. You can take your approximate salary costs, divide that by approximately 2,040 full-time working hours in a year, and then multiply that number by the number of hours it takes to create an email for each employee or contractor involved. You'll want to be sure to include the costs of copywriting, design, technical coding, and product management. In this example, I'm going to enter $500 for $500. The next question is asking about monthly fees. These fees can include any type of overhead, such as management salary. This can also include the cost of monthly subscription fees with your email service provider, as some service providers charge a fee beyond the cost per email sent. Some of the lower cost providers charge a single fee for unlimited emailing. You'd include that amount here. In our example, however, we're just going to enter 0. Finally, you should enter the cost per email you pay. Most professional email service providers bill for the actual number of emails sent. If you pay $15 per 1,000, you'd have 15 divided by 1,000, or 0.015. So let's enter that into the field. Okay, we're almost done. Let's hit the next button. Step 4 asks about the historical performance of your emails. The first question is asking about your segmentation. If you don't segment at all, just enter a 1. If you typically segment your list into 2 segments, perhaps one for men and one for women, then enter 2. We're going to assume 1 for this example. Next, enter your average unique open rate you've been experiencing over the last 2 or 3 months. You can easily get this number from your campaign reports from your email service provider. Be sure to use your unique open rate, not a total open rate. For reference, your unique open rate is defined as the percentage of people who open your emails at least once for each of your campaigns. This is calculated as the number of unique opens divided by the number of people you sent to minus the bounces. Again, you'll likely be able to pull this number directly from your campaign reports. In our example, we're going to enter 20%. Next, enter your unique click-through rate. Again, be sure to use your unique percentage, not the total number of clicks. This is another number you should be able to pull directly from your campaign reports from your email service provider. This is calculated based upon the number of unique individuals who clicked on a call to action in your emails, divided by the number of individuals you sent the campaign to, minus the bounces. For this example, we're going to enter 5%. Landing page conversion rate is also critical to your model. What we're asking here is when someone clicks from your emails onto a landing page, what's the chance he or she will convert, buy something you're selling, sign up for whatever you're offering, etc.? So, if 100 people click through, what percentage will take the desired call to action? In our case, we're going to assume that 5% take the call to action. Your very last piece of data is the value of your conversion. If you're selling something, that's easy. It's the average price. Some companies like to enter their gross margin instead of their total revenue. If you're not selling anything, you can still assign a monetary value to your conversion. For example, if a lead is worth $100 to you, enter that. For this example, we're going to enter $100. Click the Finish button and you'll see your customized model. You will see that the ROI Goalstetter tool gives your model a default name. Let's go ahead and change that name to something a little more specific. Just double-click on the tab name right here and enter a new name. Let's pretend my model is for an online store that sells books about yoga. So I'll label mine Yoga Books. If you make any changes other than changing the default title of your model, you'll want to remember to click the Save button. Stay tuned for our next tutorial where the fun really begins. We'll walk you through how to truly understand the graphs and charts and how to edit your model's assumptions so you can see where you can get the most lift out of your email ROI.